Hello, everyone. First of all, thank you very much for the invitation. And thank you especially to the students who organized this event. I think it's great that such a professional event is student organized. It shows also the intellectual prowess of the TUM in Munich. And we are very, very happy to be here. So thanks again for the great organization. I'm also very happy that we didn't burst into flames the moment we reached into the room, because we represent the traditional finance world. So I think this panel here is one of the ones that most heavily skews into traditional banking, into the traditional banking sphere. But we're still here because even though it took a while, the topic also reached the traditional finance world, and in a major way, I would say. But nevertheless, the question is, are we already at the plateau of productivity? For those of you who don't know this term, there is, from Gartner, they have the so-called hype cycle, and they say most innovations go through a cycle of different stages of hype. So you have the beginning where the hype picks off, you have this peak hype moment where everyone talks about it. You can think back to the NFT hype, for example. Everyone is talking about it. Paris Hilton buys a Bored Ape, whatever. And then you have a fall off, a drop off, because of course this one innovation is not going to change the world by itself. It never works that way. And even though it's a cool technology, before it reaches every part of our life, it takes a while. So the innovation after the peak drops off into the valley of despair and then claws its way slowly back up the plateau of productivity, where, when it's a really great innovation, where it will stay and permeate everyone's life, basically. So the question of today is tokenization. People have been talking about tokenization for a while. It's not a wildly new topic. Even for the big financial institutions, it's not a new topic. And I'm half Brazilian, my mom is Brazilian, and there is a Brazilian saying, and sometimes I have to think about the saying when I think about tokenization. They say Brazil is the country of the future, and it always will be. So the question is tokenization similar? Is it the technology of the future, and will it always stay the technology of the future, or are we actually really reaching the plateau of productivity? To discuss those questions and to tell you a little bit about where we are, we have assembled a great panel. And we are going to go into some introductory rounds in a second. First, I'm going to introduce myself. Hi, my name is Rafael. I'm head of operations for Cashlink. Cashlink is the most untraditional, traditional finance company here on this panel, because we are also a startup, a fintech, and we are the market leader in tokenization in Germany, I would argue, at least in the area of regulated tokenization, so within a legal framework where we work with large financial institutions. And then I think we can make a round and everyone introduces themselves, please.
Great introduction, Rafael. Good morning, everyone. My name is Forma. I'm heading the treasury of VE Bank. VE Bank is the promotional bank of the state of Hessen. And I think with respect to this panel here, I'm the most traditional finance guy on the stage right now. We had one project last year together with Cashlink, where we tokenized a registered bond. We were also investing in some crypto bonds lately, and yeah, to be discussed whether we are already reaching the plateau of productivity. I would say we are at least through the valley of tears, and yeah, the future will be soon.
Thank you. Christoph, Hock, my name. I'm head of tokenization digital assets at Union Investment. Union Investment is one of the largest asset managers we have in Germany here. We have about 520 billion assets under management. We focus on blockchain technology literally for more than 10 years right now. And Dynamic came into this topic about 5 years ago. When we started focusing on investing in tokenized and DLT-based traditional financial products. So for us, blockchain in combination with AI, in combination with quantum computing is one of the real drivers of technological digital transformation in the financial industry. And we are a strong believer that in a couple of years' time, tokenization will be the new format. So it's not a hype, but it's a topic really to stay, which will significantly change the landscape of our financial industry. And for us, it's important. We are very client-centric. Financial market player that not only today, but also in the new digital world, we are able to deliver best-in-class services to our investors. And that's why we are focusing on all these digital topics at a really early stage.
Cool, thanks. Can you hear me? Yeah, I think so. I'm Miguel. I run the digital asset custody business at HAL, which is now part of the ABN AMRO Group. We were one of the early players in TradFi to go into the digital asset space. We started 5 years ago setting up funds that would invest in cryptocurrencies. And 4 years ago, almost exactly 4 years ago, we acquired a crypto custodian that I now run. That was the second one after Coinbase to get a license. We have a business that goes on digital asset custody, on setting up funds that invest digital assets, but also tokenizing them. We have in-house a registrar that can, under the Electronic Securities Act, set up both bonds and funds in a digital asset form. And we also share the same assumptions as you, Christoph. It's the customer. We have all of these questions about, do we need tokens? Do we need DLT? Do we need all of these things? But in the end, we think that the customer has to decide. And if the customer wants certain types of assets, then it is our job to give the customer exposure to that kinds of assets, obviously under the quality that we are obliged to assure. So yeah, very happy to the panel and for the discussion that's upcoming.
Great, thank you for those introductions. I already have a few questions in mind. But before we start into the questions, just a brief overlook over the topic and also a bit of history. Something that is important because we don't know if every audience member, of course, knows why are banks actually now picking up the topic. And the reason is actually not the technology itself, because the technology of tokenization, the technology of blockchain is relatively old. The white paper was published when? 2009. Shortly after came the Ethereum blockchains, the capabilities to build smart contracts, to tokenize. This is not a wildly new topic. But one puzzle piece has been missing, at least for the traditional players, to jump in. And that was a proper legal and regulatory framework, the most sexy topic of them all, which is why this topic actually picked up, because in 2021, I would say that was one of the key moments here in Germany where the groundwork was built for this technology to permeate. And that is the Electronic Securities Act, EWPG, Elektronisches Wertpapiergesetz, beautiful German word. Try to say Kryptowertpapierregisterführer 3 times in a row, fast. Miguel talked about this. Why was this such a milestone? This law basically allowed tokenized financial instruments to be on the same level legally and regulatory as traditional instruments. So while before you actually needed a paper document, a paper certificate laying in a safe somewhere in Frankfurt, protected by heavy armed people, you now could also issue tokens, and you could issue a so-called electronic registry that works on the blockchain, and that would be of equal value and of equal legal standing. And that is important because why would a financial institute will always be risk averse, and technology needs to be proven, and especially the legal setup needs to be proven. That is even more important, I would argue, than the technology itself, because only when the regulator is happy with you, you can survive. So this is why this whole topic picked up. We have this since 2021. But nevertheless, we have been talking about tokenization for a while, and 2021 is now also already 4 years in the past. And still, if we look at the market today, we have some lighthouse issuances. We had our project, Hock und Lampe, they did some great projects. Union Investment is investing. But if we compare the market share of those digital assets to the market share of the traditional assets, it's still a drop in the bucket. So you already answered one of my first questions. Are we through the Valley of Tears already? Are we still dropping down? Are we already approaching the plateau of productivity? Where do you think, where do we stand today and why? Let's start with Miguel.
Sure. I think to answer that question truthfully, we always have to set some assumptions, right? And the assumption here is clearly, and I think people in the room share this, is that there's an advantage to having a digital form. That advantage is really the same thing that we experience while exchanging information or messages. When I send a text nowadays, I'm using exactly the same words that I was sending through a letter 30 years ago. But I'm not using a letter, and I don't remember the last time that I sent a letter, to be honest. So there's an advantage there for me, and that is the context is much richer at that point in time when I send a letter, when I send the WhatsApp message, and I can do it very cheaply from my own resources. So the assumption on the digital is that I will do it cheaply, right? For us, it means that maybe we can do the same things that we're doing now, cheaper, faster, and more often. And of course, we've been talking about this, and probably a lot of people have said this already for a long time. The difficulty is that making it happen is a lot harder than just talking about it. And the assumption that we have that it is better, I think it is being backgrounded now with some hard facts, right? So having just the asset is never enough. So we need, if you think of funds, you need a lot of things that you need for the asset to fulfill. You need liquidity, you need them to be held, you need corporate actions to be managed, and so on and so forth. And now, at the level of liquidity, there's a lot of requirements that we are now able to fulfill with the advantages of the blockchain. Right? So it's the first time, the first year where we can say, I have a security on-chain, I have a payment instrument on-chain, and I also have a means of exchanging it on-chain, right? So now the pieces are there, and it's our job to make the tokenization plateau to really improve.
All right, Christoph, go next.
I guess we are getting there. So life is a marathon, and I think we are probably somewhere between kilometer 5 and 10. But differently to marathon, I guess we will see a significant speed up now coming over the next couple of 6 to 12 months. So for us, when we're looking at blockchain as an asset manager, the key question is not what is possible from a technology perspective. The key question is what's in it for the client. Which advantages can we deliver to the client? What is the problem we would like to sort out? And when looking at blockchain technology, Miguel mentioned it, we have speedier processes. We talk not about traditional settlement of securities, T+2, T+3, T+5. We talk about instantaneous settlement, clear benefit for the investor. We talk about accessibility. At the moment when typically you want to purchase stocks, most liquidity you have during the opening hour, traditional opening hour of exchanges. Going forward, you know it from the crypto world, we will see 24/7 trading. That will also be applicable for traditional tokenized DLT-based securities. Second benefit. And then what's also important, looking at the investable universe, typically today we talk about, when focusing on traditional assets, we talk about equities, we talk about bonds, we talk about fund shares. What is it what blockchain can deliver? One of the key characteristics is fractionalization, meaning you can trade very small proportions compared to an entire big portion. For example, when investing in alternative assets, private equity, private debt, look at the equities world. Now you can start accessing stocks pre-IPO on some of the US platforms. And you can invest fairly small amounts. You can set up a savings plan with 50 euros. You do not have the 500,000 euros or million entrance fee to invest in these type of products. So big picture, the investable universe for US potential investors, this will grow significantly with a factor probably 10, with a factor 20 compared to what we have right now. So that's what blockchain can deliver to the end investor. And again, looking at accessibility, so the medium to long-term vision is that you have one app, one wallet, where you have all your assets, regardless whether that's cash equivalents, or type of securities, traditional or tokenized securities in there. And that in combination with 24/7 trading, with an instantaneous settlement will allow you, you go shopping on a weekend, you purchase a used car for 5,000 euros, you access your yield-bearing product, a tokenized money market fund, you ask via an automated market maker for a live price for this product, you sell it when accepting the price instantaneously, you monetize your invested product immediately, and then another double click on your app and you can transfer the money to the seller of your car, and you can leave the shop with straight with the car under the arm, so to say. That is really the benefit blockchain technology can deliver. And do we have at the moment a demand from investors for tokenized products? The clear answer is no. Because I guess most investors, they are yet not familiar what this technology can deliver. But as said, we are somewhere now coming into the hockey stick, where we will see a significant dynamic over the next couple of months. One of the big drivers from my perspective is the cash lag. So we have a central bank, the ECB, coming in about 12 months plus with a digital euro for institutional investors, the so-called wholesale CBDC or wholesale central bank money. We will see the digital euro at a later stage. Here, some discussions we will have today about stable coins, which are all Unity, I think, will also present here, which are already accessible today. And the cash lag at the moment is the key driver we see, and based on the cash lag, we will see fairly soon a number of assets on chain, and therefore I'm extremely bullish, and I'm sure when we talk in 1 or 2 years' time here at the same place about tokenization of assets, we are much more progressing compared to the status quo where we are today. And that's why it's important for us. Again, we are a service provider for our investors. That's why it's important for us to be ahead of the curve, to be really proactive in this space. It's something where first we have to create an offer, and then we will see a demand from investors. It's not the other way around, because when you see investor demand, and when you then start thinking about launching products, then it's by definition too late and you are out of the game.
Christian, do you remember the question?
I remember the question, yeah.
At which marathon kilometer are we? What do you think?
I like the picture really of a marathon, and I agree with you that kilometer 5 to 10, I would agree on that. But 24/7, 365 is a nightmare vision for a traditional finance treasurer, of course. There are some problems in it, because you have to overcome the intraday liquidity management, but there's also a chance there to create new products on that topic, to derive maybe from other products we already have. And this is one of the most arguments I hear when I discuss it with some serious old guys, treasurers. So, okay, why do we need that? And I have problems adopting this new technology. Yes, but think it not only as in your small mind as with your puzzle piece. So take the global picture of that one. And you mentioned right that we need also the cash on ledger, and ECB is doing a good job from my point of view. It takes a little bit too long. I mean, the Pontus initiative will start only in 1 year's time, and 1 year is pretty long time for that. And you mentioned also the wholesale CBDC, which of course we need to get these things done. And the framework or the timing for that isn't pretty clear on that. This will be an important push for the technology. So when I take a look into 1 year's time with the enhanced trigger solution then from ECB in place, I think this will give it another push in the market. Most of the market participants are preparing for that scenario. But first, we have to overcome some disadvantages we still have before we come to all the advantages. I mean, from an economical point of view, there are still some disadvantages. Why would I, as an investor, and we both ways, as an issuer, and also as an investor, why should I invest in a KfW or NRW bond? Yeah, they have a pickup on their comparable yield for similar bonds, but there is a lack of liquidity in secondary markets trading. These bonds are still not ECB eligible. That means I cannot count it for my HQLAs. The HQLA means high quality liquid assets, which is important for my number when it comes to liquidity coverage ratio. So the very short end of my treasury function. And first we have to overcome these obstacles before there will be a major push in this market.
Thank you all. I think, just to make it more interesting, I'm going to disagree a little bit. I think in the marathon example, we are already a bit further along than 5 to 10 kilometers. And one of the reasons I think that is because innovation happens exponentially. And it's difficult to think exponentially for us, and I also can't predict the future, but it starts slow, and it feels very, very slow until it doesn't, and until it picks up explosively. And you mentioned the hockey stick. I think we might see a hockey stick also here. And a few of the major barriers, the legal and regulatory ones, are already overcome. There are still some that also need to be overcome, and networks need to be built. But once this has happened, I think we will see an immense pickup in speed.
Absolutely with you, Rafael. Why do I believe we are at kilometer 5 at the moment? When looking, for example, at tokenization of bonds, which is currently one of the key themes when focusing on tokenization of traditional assets. Yesterday for a presentation, I was preparing the topic tokenized bonds, what is in the notional outstanding. Just to give you a comparison, so at the moment, globally, we have 54 tokenized bonds outstanding. Looking at the entire universe of bonds, it's a couple of 100,000. So are we there? You mentioned some of the disadvantages. A clear answer is no. Will we get there with the central bank action? Will we get there with secondary market trading, which is possible under the DLT pilot regime, where we see a number of licenses now being granted? Clear answer is yes. And that's why you're absolutely right with this hockey stick. It's an exponential curve. And the big risk, I don't like the term TradFi, by the way, because it sounds shitty, boring, old-fashioned, and also traditional financial institutions can be highly innovative. That's what we see with Hock, with you guys, and also with us as Union. The big risk we face if we don't get on this topic, I like to call it the Nokia trap, is that as a traditional, highly successful player, you underestimate the dynamic of disruption coming from technology. You feel safe with the P&L you have in the pocket on a yearly basis, and you do not have a visionary view what might happen in the next 3 to 5 years. So that's in the big risk. The traditional financial industry is running. I'm sure in 5 years' time, 10-20% of the traditional players, they won't be there because they exactly fall in this Nokia trap, underestimating the dynamic. And that's why it's important now that all the relevant stakeholders, regardless whether it's an ECB, whether it's BaFin as a regulator, our Ministry of Finance, creating the regulatory framework, or the private institutions, banks, issuers, we have the once-in-a-lifetime opportunity to redefine financial market infrastructure based on this new technology. The change will happen, that's crystal clear, and we have the chance to create a strong Europe, what is called a digital capital markets union, not to screw it up as we did it in the past with all the other technology development. I think it's pretty clear why Silicon Valley is not nearby Munich or nearby Berlin, but it's in the US, because we've been too slow about 25 years here in Europe to adopt this technology. Now, looking at blockchain, we are really, as an entire industry, ahead of the curve. The Americans are picking up with Trump in a very speedy manner, and we have to bring really all the forces together, all the high level of innovation to assure that we have a strong Europe and that we have here competitive edge, and again, with a benefit for the end investor at the end.
One thing that would interest me is you three represent a quite big share of the overall banking market or financial market here in Germany. What are projects that make you really excited? If you look into the space of tokenization, of blockchain, what really makes you super bullish? Because I see all of you are positive. Can you give us some examples? Christian.
What makes me confident that we are on the right path is, for example, that some guys like KfW, which is one of the biggest issuers in the market and the biggest investors in the market, they are pushing really hard forward. So for me, as a small treasurer of a small promotional bank, I'm pretty relaxed surfing that wave which KfW is creating. So what could possibly go wrong? Yeah, a lot of things. But when these big market participants are going straight forward, I think this is the right action. And as you mentioned, ECB, Bundesbank, the BaFin, they are pushing really hard. They are pointing out the geostrategic value of the digital euro, of the wholesale CBDC. And I think that some of the market participants are still missing that piece, that they are, okay, this is some kind of new technology. Why are treasurers and investors discussing tech things? I think the technology, before we are reaching the plateau of productivity, this plateau is reached when the whole discussion is some kind of invisible, and we don't need treasurers to discuss tech. So this is a pure thing for you tech guys to bring this technology forward. But you're totally right. The moment is now that we have to create this opportunity and this new market.
So, what I would like to say, what makes me really happy about what's going on first is that I think I would say two waves. So the first signal that we really have to see is how big, how profitable, and how large centralized exchanges are becoming. And in the end, all of the money that we in the end have and we in the end manage and create is retail money, right? So it all starts from there. And so what a lot of banks are seeing is outflows. And so there's a clear adoption of traditional, of innovative investment propositions from the centralized exchanges. What Christian was mentioning really is kind of like the Königsdisziplin, so like the most hard things to do, which are the capital markets with large amounts, with larger financial institutions. And what I like to see there is another wave of adoption, which is when we started 4 years ago, it was pretty lonely. So there were not many institutes that we could collaborate with. And nobody does anything alone in the capital markets, right? Not even Union, as big as you are, you will not be able to move the needle alone, right? We need a whole set of players working. We need investors, we need the market makers, we need the distribution channels, we need all of the functions that you require in order to set up the funds, right? And all of those players in some way or another are participating. So when you look at the Volksbank, when you look at the Sparkassen, all of those are very, 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 very traditional players that are now starting to look and how to offer new products to the customers, right? And if we think now even more on what the role of Clearstream is having on providing accounts, custody accounts for Bitcoin, Ethereum, KfW as well, let's be honest, these are the most boring, so to say, players that you could have in the capital markets or most established, and they are moving. So this is what keeps me really happy. Also, specific projects, very pointed what's happening on the tokenized money market fund space. If you look at how big they are getting in the US, this is not nothing, right? So I think it's a great momentum that we have at the moment.
Yeah, what makes me really comfortable that we see a significant dynamic kicking in is competition coming from fintech firms, competition coming from large cap techs in the financial space. You mentioned, Miguel, the traditional financial industry is pretty much centralized. We have lots of oligopolies. Oligopolies, all we know, we know it. They come with high cost for the end investor, with less innovation. And I think over the last couple of years, why didn't blockchain technology in the traditional financial world really fly through the roof was that the traditional players were asking, where's the business case? Do we become profitable with certain products in 6, 12, 24 month time? Clear answer is no. So that's the same on our side. We launched a blockchain fund about 2 years ago. The first question I got asked from the board before we got approval, will we make money with this product? And I said, no, not in the short term, but we need to have it to assure when investors, when they start focusing on blockchain, that we can deliver, that we are ready. And it's about creating future robustness on the traditional financial side to be able to deliver in a couple of years' time. So all we do is a clear investment right now. We definitely do not monetize in the short to medium term, but we have the assurance that when going this path, we are ready in the long term to deliver. And that's, I guess, what a number of traditional players, is it banks, is it exchanges, what they didn't realize. And now pressure is coming up from fintechs, from large cap tech firms. We've had Google announcing about 2 weeks ago that they will step into the financial sector with the delivery of permissioned blockchain. So that's the first time that Google publicly announced that they will enter in this space. Most recently, preparing another presentation, I was comparing exchanges on the fintech side with traditional exchanges, and also to my surprise, I realized that Coinbase is as big as the aggregate of Deutsche Börse, Euronext, which owns NYSE, New York Stock Exchange, plus London Stock Exchange. And that's, from my perspective, fucking, sorry for my French, fucking astonishing. And that's what's creating the competition. About 3 years ago in trading, we've had discussions, should exchanges shorten the opening hours to make trading more efficient. Now we see all the Robin Hoods of this world entering from having grown up in the crypto space, in the dedicated crypto space, entering the traditional financial world. And out of a sudden, NASDAQ came with the announcement, surprise, surprise, we will offer 24/7 trading in the future. So, and that's really the competition I like to see. We've had about 3 weeks ago, Robinhood coming with a statement, we offer tokenized stocks to our investors. And then NASDAQ, yesterday they announced we will also offer tokenization of stocks. And that's where some of the slow-moving, boring, traditional financial market players, and they are forced now to assure that they survive in the medium to long term. They are forced now to go into competition with these fintech firms, with large cap tech, and that's what makes me really confident that we see now a significant pickup in this entire area.
One thing I'd like to add, I mean, we are only discussing bond markets right now. So fixed income is the most important part of the financial market system, but then at the entire financial markets, we are not discussing right now. Of course, we have seen some initiatives on equities, but we have credit markets, equity markets, derivative markets, and so on. And we haven't even thought about new products. And there is some room for new products. And this why academia is important, like the TUM, to think about, okay, what new kind of products can we design out of that? And my visionary thinking is, okay, we are not only tokenizing some part of financial markets, we are tokenizing the whole financial market. We are going to some kind of token economy. And if you have that in mind, of course, you need to have a 24/7 trading. But to be honest, I'm in the market now since 26 years, and we also already had some initiative, I think it was in early 2000 years, 2002, I think it was, where the major exchanges around the world tried to establish some 24/7 trading. And of course, there was some kind of lack of liquidity. So the possibility to trade 24/7, 365 doesn't mean that it is also very liquid in these markets.
You have a certain pot of liquidity, and by extending trading hours, this liquidity pot will not significantly grow, but at least you have the opportunity when you see some headlines coming on a Saturday or on a Sunday from Mr. Trump, which might be market moving, you have the opportunity to react right now. And I guess you probably wouldn't shift 30, 40 million, but maybe a couple of €1,000. And I think for retail, 24/7 trading will be a massive, massive benefit.
Now, we are sitting today at an event where we also have lots of what I would call more traditional crypto companies. So sometimes if I look at the landscape, I sometimes imagine the whole financial landscape being the US 1865, and you have the crypto space, which is the Wild West, where you have DAOs investing in fractionalized NFTs and then lending them out over or on a decentralized exchange or whatever. And then you have the traditional finance world. We have the New York with the stuffy old guys with the suits and the ties. And currently, what we're seeing is that the traditional world, the TradFi world, the word you don't like, that we are borrowing a lot from the blockchain and crypto space, right? Even the Bundesbank in their trials last year tried out a HTLC, a hash time lock protocol, which comes directly from DeFi, so basically plunk, take it out and implement it in their own world. But it's still just taking the pieces that work and implementing it in the traditional world. So it's not really merging, I would say, at the moment. Where would you say, you three, is the future going? Is it going to stay two separate worlds divided by an invisible wall? Is it going to merge, come together in all one big financial market coexisting? Or is it going to cannibalize itself in one direction or the other? Either the crypto space overtaking the traditional finance space, or vice versa, the traditional finance space being so efficient that why do we even still need a decentralized exchange if we can offer the same features, so to speak?
I think what's really key when looking at the financial industry as a whole is to see that markets are based on trust. So that's the biggest asset we get from our investors, trust, and that's a role we clearly have to fulfill. Also in a tokenized world, which from my perspective will become the new normal in a couple of years' time. And just looking at the role our regulator BaFin has, what is it? It's point number one, guaranteeing, securing financial market stability. And point number two, it's assuring that retail investors, they are protected. And that's in the framework going forward. we have to work in. I was most recently on a conference where we've had also the discussion TradFi, FinTech, how will it develop? And the outcome was we will have TrustFi. And that's, from my perspective, really the impressive term we have to work on it. It's not helpful when we implement everything which is possible from a technology standpoint. Just look at the US, FTX, I think for very good reason didn't happen here in Europe, but we've had this major 30 billion fuck up in the US because there was no regulatory framework. And that's what we have to take in our mind when looking at back 2008, the Lehman crisis. This also came up in the US, and that's why looking at the discussion, regulation, is it good, is it bad? My clear answer is regulation is extremely helpful to protect you as clients, to protect you as investors. And yeah, my clear vision is that both will come together. We will have a regulated TrustFi market based on tokenization going forward. We might have some elements, you mentioned DAOs, which are out of regulation. I think also in the DeFi world, we have some stuff which is possible where I don't see that we will get it regulated somewhere in the short to medium term. But investors, they must make sure themselves when accidents happen on these platforms, they can't expect that they get refunded by any government organization, that they will get bailed out. So therefore, I think we will have going forward something like a 90% plus regulated financial market with a safety net for investors where financial market stability is guaranteed. And then we have an area in the DeFi space, 5 to 10% for the really advanced retail crypto native guys. But as said, they have to make themselves clear that there's no safety net on these platforms then.
So I think you added the most important point, regulation and trust. There's another very important point, which you mentioned, Rafael, which is the question of tech. So definitely, so I see DeFi as an incredible, with a lot of track record, incredible space. Feels like sometimes like this big Monte Carlo experiment, where we try to see what survives and what does not survive, and a lot of stuff does not survive. DeFi, however, is built from the point of view of the investor is doing all of the things for himself, right? This custodial aspect or the self-custodial aspect is not something that we can borrow directly from DeFi. So I like to say that all of the solutions that we have from DeFi are pretty awesome. For us on the TrustFi, they're mostly 80% solutions. So now we need to figure out what the 20 lasting % are, right? And so this is why I think, for example, what the TUM is doing with financial institutions, doing projects for a quarter, making working students or having working students work with companies, I think that's pretty cool because then we have the chance of conveying some of the requirements that we have. So let's say, even from the point of view custodian, we hold the keys for the customer. No, the customer doesn't hold his own private keys, so to say. This is already a shift in paradigm, but it is important so that the rest of all of the product suite that we have can actually be compatible with this underlying change premise, right? And so I think that the dialogue between the DeFi world and the TradFi should be intensified with the universities. That's great, so that we can actually achieve this TrustFi.
So my vision is when we have a level playing field from old world and new world, markets will decide which technology will be best. And my guess will be, of course, that the new technology will be paving the way. Thing is that the tech thing is faster with less risk by design, and the old world is moving, but my vision will be that maybe in 10 years' time with the whole entire regulatory framework and a wholesale CBDC, we will have a significant market share of blockchain technology.
All right. Actually, this is the point where I wanted to open up for the audience to ask some questions, but I've just been informed that we only have 2 minutes left. So the questions will have to be asked to us in person. We will still be here, at least most of us. I think, Christoph, you will have to run to the airport, but the rest of us will still be here. So thank you three for your time.
Rafael, maybe a very last word. So it was really great that we could be here today. Many thanks for the invite. And as you've heard from us, tokenization is a topic which doesn't go away. So in a couple of years' time, tokenization will be the new normal. So we don't talk about tokenization anymore because it's widely accepted in the industry. And you're doing a fantastic job here at TUM, and you are absolutely on the right path. And can be really proud of what you've achieved so far, and I'm sure when it comes to IPOs in the stock market, maybe we might see some unicorns grown up here in the blockchain space in Munich. So many thanks and congratulations for what you've achieved.
Thank you.